Yes, a very good evening to all of you. Very good evening, guys. Just waiting for others to join. Okay. I guess students will join. I hope you can hear me. Yes. Am I audible? Good evening. All right. Let us start with our revision session. I'll just wait for. Okay. So students will join eventually. Yes. So, guys, let us discuss the let us continue our discussion from yesterday. All right. Okay. So we had discussed up till the object clause. So let us continue our discussion with the object clause. So we were discussing memorandum and articles of association, and today we are also good evening, Ritika. And today we are also going to discuss prospectus and allotment of security. I have a very special handwritten note for you for private placement. Okay. So we are going to discuss private placement also with my special handwritten note for you. Okay. So let us quickly try to finish this chapter first. So the object clause, yes. The memorandum of association. Yes, who is this creative designer? Yeah, I read your comment the other day. Hi, good evening. Yes. So the object clause, yes, it mentions the main objects as well as the other objects of the company. The main objects of the company are the very purpose for which the company is incorporated, and the other objects are those objects which are required to fulfill the main objects of the company. Okay? So company has main objects as well as the other objects. Anything which is beyond the object clause will be considered as ultra vires and hence void. What if the act is ultra vires the memorandum? If the particular act is ultra vires, act means action, is ultra vires the memorandum, then it is void. It cannot be ratified. Okay? It cannot be ratified even with the unanimous consent of each and every member. But what if the act is just ultravires the articles? Then yes, it can be ratified by altering the memo, by altering the articles. Okay. So in case the act is ultravires the memorandum, now let's say I am a garment manufacturing company, I am entering into contract for making of tires, it is ultravires the memorandum, it is void, it cannot be ratified even with the unanimous consent of each and every member. However, if the company was allowed to borrow, okay, the company was allowed to borrow, but the company was there was a limit imposed on it in the articles. The limit was, let's say, of 5 crore rupees, beyond which they required the approval of the shareholders in the general meeting. Now they have borrowed 7 crore rupees. This is ultra vires the articles. The company can still ratify it and agree that okay, we will pay off 7 crore rupees. Ratification is possible because it is just ultra vires the articles. All right. In this case law, Ashbury Railway Carriage and Iron Company Limited versus Ritchie, this case law is important for exam. If a question is asked on the object clause, you have to compulsorily write the name of the case law. Explanation of the case law is not required unless they ask you. There was one attempt in which they had asked that explain the case law, explain with case law. So in that case, you have to explain the facts of the case. If it is not asked, it is not required. The liability clause will mention whether the liability of the company is limited or unlimited, whether limited by shares or by guarantee. Association clause, every subscriber shall indicate across his name the number of shares that he has agreed to take, which should be at least one. If you see the actual memorandum of a company, in that there is a table. Okay, in the actual memorandum, there is a table. Like in the memorandum of my company, you will see that my name is written, and the other subscriber's name is written, and we both have taken 10,000 shares of the company at 10 rupees. So we both have contributed 1 lakh rupees, and this is our paid up share capital. So we must bring in some money. See, how can the company function without money? So you have to bring in some money, and how much are you going to bring? That will be mentioned in the memorandum. Good evening, Abiz. Good evening. Name of the nominee will be mentioned in OPC. This is this is required only in case of a one person company. Okay, this is required only in case of a one person company. Subscription clause, it is also known as subscription clause, also known as subscription clause. So who is the nominee? So in case of OPC, the name of nominee will also be mentioned. Are questions asked on this part? No. Questions are asked only on the object clause. But yes, questions are asked on the alteration part. Okay. So we discussed the alteration of name and registered office clause. Let us continue. In case I have raised money by issue of prospectus and there is some unutilized amount. Let's say, for example, that I had raised 100 crore rupees saying that I am going to build offices with it. Okay, I am going to make office buildings with it. But after COVID, we realize that people are not going to offices. They are all working from home. In fact, the demand for bigger houses has increased. So we have already spent 60 crore rupees on construction of the offices. That we will continue. That is over. But we are planning to utilize 40 crore rupees for construction of houses. Now you have raised money. Okay, you have raised money for the purpose of for the purpose of offices, but now you're planning to utilize that money which you have raised from the public for the construction of houses. Then you need to obtain the approval of the shareholders. If they agree, they will continue. Otherwise, you will have to give an exit route to the dissenting shareholders. Dissenting means ones who do not give their approval. So they will be paid off and they can leave. In case of a company which has raised money through the issue of prospectus and some money is unutilized, step number 1, you will pass a special resolution through postal ballot. Postal ballot is a method of voting. This ensures that many people get to participate in the voting because you are given a ballot paper. You just have to put your whether you want to vote in favor or against the resolution, and you can send it by post. So this ensures maximum participation. People need not attend the meeting. In fact, there is no meeting only in case the voting takes place through postal ballot. So meeting is not required. Everybody participates through postal ballots. This ensures maximum voting. So SR through postal ballot will be passed. Then you will publish it in the newspaper. Why is it required to publish in the newspaper when you are already sending notice of the meeting? There are people who may complain that we did not receive the notice of the meeting. So for them, you need to also publish in the newspaper, and we will place them on the website also. Some people change their address. They claim that we did not receive the notice of the meeting. So for them, we will publish it in the newspaper, and we will also place it on the website of the company. There are people who do not give their consent, that they don't want to, they don't want their money to be utilized for some other object. They will be given an opportunity to exit. So we will give an opportunity to exit to the dissenting shareholders. ROC will register and certify the alteration. Okay, so we will alter the memorandum, and then we will give that altered memorandum copy, special resolution, everything will be filed with ROC. ROC will then certify the alteration. Okay. Manner of altering the capital clause, section 61. This is very important for exam. You can write over here. It is important. What are the different ways in which the capital may be altered? See, the capital clause will always mention the authorized capital of the company. Extra details need not be mentioned in the capital clause in the memorandum. Like, I want to disclose the types of shares, the rights associated with shares, all that you can write in the articles. You need not write that in the memorandum. The amount of share capital with which the company is to be registered, the number of shares each subscriber has undertaken. So, in something of this sort will be mentioned. Basically, in the capital clause, we will only write that the capital of the company is rupees, the authorized capital of the company is rupees 10 lakh divided into 1 lakh shares of 10 rupees each. Okay, so this much is sufficient. Extra details, write in the article. Okay, you need not write it over here. So this is the amount of share capital with which the company is to be registered. Now, if I want to alter, so what are the different ways of altering the capital? I want to increase the authorized capital, pay the extra stamp duty, and you can alter the capital. You want to issue more shares, alter the authorized capital. Consolidation of shares. So I have shares of face value 10. So 10 shares of face value 10 will now become 1 share of face value 100. Okay, so we have consolidated the shares, or vice versa. So I have shares of face value 100. Now people who own shares of face value 100, one share, okay, one share of face value 100, now they will get 10 shares of face value 10. Okay, so their holding is going to remain the same, but you either consolidate or you divide. Conversion of share into stock and vice versa, subdivision, which I already explained, that is known as split. Cancelling unissued shares. Now these unissued shares are those shares which form part of the authorized capital. Okay, they form part of the authorized capital. I don't need that much capital, so I am cancelling those unissued shares. They have not been issued only, so it means there is slight reduction in the capital which has not been issued. There's a like diminution of capital. No person is affected because there are no subscribers only for this. So no person is affected. That is why it is allowed. You just need to pass an ordinary resolution for altering the capital clause. It is such a beautiful one. You are passing just an ordinary resolution, and the authority to do this must be given in the article. See, you are altering the memorandum. Capital clause is in the memorandum, but the power to alter the capital clause in the memorandum is given in the articles. Just give a notice to the ROC that we have altered the capital clause. Ordinary resolution needs to be passed in the general meeting. This can be asked in the exam. That is why section 61, that section number is important. Articles, yes, they are the internal regulations of the company. The word internal is very important. Okay, they are the internal rules, they are the internal regulation of the company. Please note students that memorandum, ओके, मेमोरेंडम में लिखा होता है कि कंपनी क्या काम कर सकती है, व्हाट कॉन्ट्रैक्ट्स कैन द कंपनी एंटर्ड, और वो कैसे करना है. ओके, कैसे करना है, that is given in the article. So articles basically cover the rules and regulations. Okay, so memorandum में लिखा है what is the scope of power of the company, की company क्या काम कर सकती है और वो कैसे करना है, what are the rules, what are the regulations, that is given in the articles. What is important for exam? Alteration of articles can be asked as a short note for 3 to 4 marks. Okay, can be asked as a short note. So if I want to alter the articles, anyways they are internal documents, alteration of articles is possible. So alteration will be effected by a special resolution. Yes, just pass a special resolution. Now, when will we alter the articles? That is also very important. When will we alter the articles? See, articles are basically altered when you want to alter certain rules or regulations of the company, but also when you want to convert a private company to public company to private company. If I am converting a private company into a public company, then I will have to exclude those restrictions. And if I want to convert a public company into private company, I will have to include those restrictions, and I will also have to obtain the approval of the central government for doing so. So alteration may include conversion. When a public company is being converted into a private company, approval of CG is required because you are going backwards. Yes, you are going backwards because a public company is converted into a private company. So approval of CG is also required. Good evening, Lakshmi. Good evening. Welcome to the revision lecture. Good evening. Students, it is possible that you may have to revisit the lecture, you may have to watch it again, because sometimes you may miss the marking, etc. But please, while watching these lectures, if you have the chart book, write all this, because this will help you in the exam. It will help you to give, it will give you a clear idea as to what are the type of questions that can be asked. Okay, so please make all these markings in your chart book. Okay, the altered articles and the approval of CG if you have obtained. Good evening, Ronak. Good evening. Good evening. Good to see all of you. So, altered articles and the CG approval will have to be filed with ROC within 15 days. The alteration will have a retrospective effect as if it was always there. Now, what is the meaning of this term? See, it is possible to ratify. What is ratify? It is possible to ratify. Okay, I'm so happy, Dinesh, that you're enjoying the lectures, and I want my students to listen in English, understand in English, so that they can write very easily in the exam. Normally, what happens is student listens in Hindi, understands in Hindi, and is not able to translate that in English in the exam. So I want, as a chartered accountant, I want you to be very thorough with whatever you are studying. So that with that aim, I have decided that most of my lectures, even for foundation, fast track lectures, and everything is now mostly in English. I'm so happy that you appreciate my effort. Thank you so much. God bless you. Okay. Yes. So it is possible to ratify the articles. Okay. I had mentioned over here that it is possible to ratify the articles. Ratification means to go back and confirm. Okay. To go back and confirm. When you're going back and confirming, it is nothing but giving a retrospective effect. Yes. Entrenchment. Okay. Entrenchment. Very important concept for exam, can be asked as a short note. Section 5. Okay, this is section 5, can be asked as a short note, and it is my prediction that in your attempt a question will be asked on entrenchment, either case based or theory question. I feel it is a gut feeling that a question will be asked on entrenchment. Now, what is the meaning of entrenchment? I have a beautiful example for you. Mr. Rohit is the managing director of his company. He is holding 80% shares of the company, and remaining 20% is held by the family members. He is very scared that he will be removed from the position of the managing director. So in the articles, he has written that I will be the managing director for life. Okay. So Rohit has been appointed as the managing director of the company. He holds 80% shares. In the articles, it is written that he will remain the managing director for life. But he also knows that if tomorrow he has to offer his holding to someone, like, he wants to raise more capital, he will have to sacrifice his share. What if the ownership of the family reduces and the ownership of outsiders increase? They may anytime alter the articles and remove him as a managing director. He's very well aware of that situation. So in the articles, he has mentioned that he can be removed from the post of the managing director only if 95% of the votes are in his favor for removal. Okay, so he knows that tomorrow anyone can alter the articles and remove him as the managing editor. He said, all right, in order to alter the article, in order to alter that clause in the article, you need to pass a resolution. Any resolution will require 75% approval. But here he's saying, no, not 75, 95% approval, if received, will entitle the company to remove me. Now you are making something more protective. This is nothing but entrenchment. Okay, so entrenchment means making the articles or making something more protective. All right, so entrenchment means making something more protective. This is very important for exam students. If a case based question is asked, please note If a case based question is asked, they will ask you something on this part. Okay, so this is very important for exam. See, I can entrench the articles anytime that I want. I can entrench that at the time of formation. If it is at the time of formation, it will be mentioned in INC 32, which is the form for incorporation. Later, it can be added by an amendment in the articles. Now, in case you are a private company, in order to add that entrenchment, you need the consent of all the members. But if you are a public company, in order to add that entrenchment later on, you need to pass a special resolution. This special resolution will then be filed with ROC in form MGT 14. Okay. Notice of the entrenchment will also be given to the ROC. So this part is something on which they can ask questions. If you are a private company, entrenchment will require the approval of all. If you're a public company, you need to pass a special resolution. Students, this part is very important for exam. You can write all that later. You can pause the video and write all that later. You can come back again and write it. This is again important for case based question. Over here, the exceptions are important. Generally, questions are asked on this part. Okay, but you will have to write the entire theory. You cannot escape that, no? So, this is very important for exam. Right now, can a subsidiary company purchase shares in the holding company? सोचने वाली बात है. How can you control the controller? No, a subsidiary company cannot hold shares in the. See, he can make a provision in the articles that no one can remove him as the managing director. But then, yes, articles are internal documents. What if the family ownership is reduced to 40% and the outsiders own 60% of the company? They can, by passing a resolution, alter the articles, remove that person. So what he is saying, that if you want to alter and remove the article, you need the approval of 95%. Okay, so he is increasing the percentage of the approval required. So in that case, the family members will also have to give their approval to remove him. So 95%. So it means that it is impossible to get 95%. Family will not go against him. So then he is protecting his right. Are you getting me? So he feels that what if 80% is hold, or 75% is held by the outsiders. Outsiders in the sense non-family. If 80% is held by non-family members, they can easily pass a special resolution and remove him. So he's saying, no, I need 95% approval. So that is the logic. Okay. So this is important. Now, no company shall hold shares in the holding company. Any allotment made will be void, except when you are holding as a legal representative, or when you are holding shares as a trustee, or when you are already a shareholder even before you became a subsidiary. In these two cases, that subsidiary can even vote, but in the capacity of a legal representative or trustee. Here, the voting power is not allowed. So, in case of a subsidiary company, it was a member even before it became a subsidiary, you can continue to remain the member. You will get to enjoy all the rights of member except voting rights. Okay, so you can continue as member. You can enjoy all rights of a member except voting right. Is it clear? So students, that was with memorandum and articles of association. Very quickly, we revised everything that was important for exam. Let us continue our discussion. I hope your doubts are solved. Dinesh, you had a doubt. I hope it was addressed. Yes. Okay. Next, let us discuss the concept of prospectus and allotment of security. Okay, prospectus and allotment of security. Now, this is a not so important chapter for exam. When you sit to revise, don't study this in the on the like 1.5 day. You get 1.5 day, right? Don't study this in the beginning. Study this chapter in the end. Okay, it is not very frequently asked in the exam, so you can study this chapter in the end. Maybe just few hours before the exam. Cover the important chapters first. Okay, what is a prospectus? Yes. Do we need to learn the definition of the prospectus? Definition is not actually very important as far as the questions are concerned, but it is always advisable to know the definition, because whatever general question is asked and you need to write the definition. So section 2 clause 70 has defined a prospectus. Now I am not going into the basics of prospectus, why it is issued and how. You already know that. Okay, so prospectus is issued only at the time of public offer of security, when you're going to the public. Why it is issued? Because there is no other means by which the public can know whether they should invest in the company or not. Like if you're going foreign, if you're going you're going to America. Let's say you're going to America for MBA. There are thousands of colleges to choose from. Which college should you apply? Depends on the prospectus. We know nothing about that college. So prospectus is the only document on the basis of which you will decide whether you want to take admission or not. Similarly, the information which is available about the company is very scattered. Like you go to Google and you find and you type Reliance, the information is so scattered. So you will not know what the company is doing, what are the vision, why they require the money, why they are going for public offer, how they are planning to utilize the money. All that is mentioned in the prospectus. So prospectus is one document which allows the investors to decide whether or not they should purchase the shares of the company. So prospectus and allotment. So prospectus, it is any document which is described or issued as a prospectus. Okay, it is any document which is described or issued as a prospectus. It includes a red herring prospectus. So the types of prospectus is mentioned in the definition itself. It includes a red herring prospectus as referred to in section 32. Shelf prospectus as referred to in section 31. Any circular notice, advertisement by whatever name called, which invites the offers from the public. This is nothing but a deemed prospectus. Okay, it is a deemed prospectus. Any document. Any document which is used to invite subscription or purchase of any security of the body corporate is known as a prospectus. If the aim of that piece of paper is to invite subscription, subscription means agreement to purchase the securities for cash, money should be involved, only then prospectus is required. Prospectus is not required for bonus shares because money is not involved. Yes. So, and also public is not involved in that case. So subscription means the people have agreed to purchase the securities for cash. Only when cash is involved, prospectus is required. What are the different ways in which a company may issue securities? Public company can go for public offer. If you're going to the public, then prospectus is required. You can go for private placement if you are very confident that you can raise money through the known people. Private placement we are going to discuss under section 42. Bonus shares, rights issue. Yes, these are the various ways in which we can issue securities. Bonus is issued for free. Rights shares are issued to the existing shareholder. A chapter which is important for exam, you should revise in the reverse order, Siley. So you should start by covering the companies incorporated outside India, audit and auditors, accounts of company, dividend, management and administration. You should revise in the reverse order. Please note, students, please note, nobody will tell this to you. Other laws is very, very important for your attempt. If you see the mock test also, many questions have been asked from interpretation of statutes, General Clauses Act, FMA, LLP. I am expecting somewhere around 30 to 40 marks of questions from the new chapters. and also other. So other laws is actually more important than companies act, because we are expecting many questions from that. So don't leave general clauses act and interpretation in option. LLP is also very vast, please cover that well. If you are facing problem in understanding. Yes, Jatin, I'm fine. How are you? I'm also connecting with you after a very long time. It's so good to see you. पढ़ाई कैसे चल रही है? You're giving group 2 na now? So yes, guys, I was saying that don't leave interpretation and LLP. If you are facing problem in LLP or any other act like FEMA, or you need help in just the new chapters, my website has a bridge course, and it also has act-wise courses. So if you face problem in LLP, just buy lectures of LLP. If you face problem in FEMA, just buy the lectures of FEMA. You will have a very detailed knowledge. You still have time. It will get over in 7 to 8 hours. You can watch it in 2 days. So go for these lectures. You need not purchase all the lectures, just the lecture in which you are facing problem. Okay. So act wise lectures are also available. New chapter bridge course is also available, and it is there in English also. Other ways, public offer may be through IPO, FPO, offer for sale of security, section 28. Private company will not go to the public. Okay. Great. All the best. If you want any help, तो do reach out to me. I will be very happy to help you. कुछ भी होगा तो ज़रूर टच में रहना. Okay, so in case of private company, we have private placement, rights issue, bonus issue. ये नहीं आएगा. All right. Yes. Then yes, let us discuss the contents of prospectus. Section 26 can be asked as a theory question. Yes, can be asked as a theory question wherein you will have to write everything. Contents of the prospectus, section 26, if it is asked in the exam, it will be somewhere around 4 to 5 marks of weightage. 4 to 5 marks. It can be asked only as a theory question, although it is not, I don't think it has been asked in the exam very frequently. Maybe once it may be asked, but yes, you need to know the contents. So every prospectus must be properly dated. See, what is the procedure that the company follows? Step number 1, if you have a notebook or if you have the chart book, just write over there. Step 1, what does the company do? The company will first prepare the prospectus. Second step is file it with the ROC, and third step is then they will publish it to the public. The answer is in that flow only. Okay, so what is step number 1? Step number 1 is that the company will prepare the prospectus. So company prepares the prospectus. Step number 2 is that the company shall file the prospectus with ROC. And step number 3 is that the company shall issue the prospectus to the public. We will issue the prospectus to the public. You can also use the word publish. All right. So these are the 3 steps. So dating of the prospectus is very important. The date which is mentioned in the prospectus will be considered as the date of publication. What is the time limit for the issue of prospectus to the public? See, the steps are very clear. Company will prepare the prospectus. While preparing the prospectus, you need to include the contents of the prospectus, section 26. Okay, section 26. Then the company will file the prospectus with ROC. After filing, within 90 days, the company will publish the prospectus to the public. By 90 days. See, if within 90 days of filing with ROC, because after 90 days, if you publish the prospectus, it will contain data which has now become very old. So within 90 days, ma'am, what if the company does not publish the prospectus within 90 days? Then it will be considered as a prospectus, a copy of which has not been filed with ROC. Allotment, if made, will be considered as irregular allotment. It should be signed by the directors, proposed directors, or their authorized persons like power of attorney. And then, yes, we will file it with the ROC. Matters to be included on the face of the prospectus, you have to mention that a copy has been filed with the ROC and the documents which are required to be attached are now attached. This is very important that a statement made by expert will be included only when we have obtained the consent of the expert that are you okay if we include your contents in the prospectus. We will not publish the entire report. We will only print extracts. Only some part of the report will be published in the prospectus. See, if today I tell you that I want to raise 1,000 crores for the construction of a dam, you will not trust me. But if I tell that the expert has also given his consent, he says that yes, it's a very good project, you will rely. Like today, if in my prospectus I write that Deloitte has given a report that this project is excellent, it is good for the environment, it is going to be very rewarding. If Deloitte is saying, then automatically the public will start trusting. Okay, the public will trust and then they will purchase the shares of the company. Yeah, correct. They will purchase the shares of the company. I thought I said something else. Shares of the company, yes, because the expert's report has a lot of weightage. Yes. So, yes, expert's opinion can be published, not the entire report, just extracts from it. There are three requirements, students, which you should remember for exam. The first requirement is that the expert must be independent. He must not at all be connected in the formation of the company. He must not be connected in the company in any manner. He must give consent. Must give consent. Okay, that yes, you can publish my report, you can publish the extracts. Okay, he must give consent. And the third requirement is he has not withdrawn the consent, okay, before publication of prospect. What about after publication of prospect? Then you cannot withdraw your consent. He has not withdrawn his consent before the publication of prospectus. Okay. So he has given his, he is not engaged in the formation, promotion, management. It means he must be independent. He has given his consent to the issue of the prospectus. He has given his consent that yes, issue the prospectus, you can put my report. And he has not withdrawn the consent before the delivery. This is the third requirement. Okay, so these are the 3 points which are important for exam. The types of prospectus, we have deemed prospectus, section 25, shelf prospectus, red herring prospectus, and abridged prospectus. All are important for short note, 4 to 5 marks. All. Okay, all are important, 4 to 5 marks. Most important, shelf prospectus, abridged prospectus. Red herring may or may not be asked. Mostly this is asked in MCQ. MCQ. This is important. All right. Now, what is a deemed prospectus? See, deemed prospectus. Thank you so much, Aditya. Thank you for your appreciation. Okay. Deemed prospectus. So, what happened earlier? The company allotted shares to an issue house. Okay. Issue house is any merchant banker or investment banker. Okay. So, the company, they they allotted shares to an issue house. The issue house then offered shares to the public. Both the company as well as the issue house avoided the issue of prospectus. So the Companies Act went to the company and said, issue the prospectus, you are offering shares to the public. The company said, we are not offering shares to the public. The issue house is offering shares. Ask them to file a prospectus. So the Companies Act went to the issue house. The issue house said, Are, what will I write in the prospectus? These are not my shares. I am only offering the shares on behalf of the company. So why should I issue the prospectus? So both avoided the issue of prospectus. So we became very smart. All right, you're not issuing the prospectus, but you must be using some document to invite the subscriptions from public. Any document, circular, notice, whatever you call it, whatever the issue house uses to invite subscriptions from the public, that document will be deemed to be a prospectus issued by the company. All the provisions relating to the contents of the prospectus as well as misstatements will apply to that prospect. Okay, so that paper is considered as a deemed prospect. The document will be considered as a prospectus if it is shown that the securities were offered to the public within 6 months when after they were allotted, or the whole consideration has not been received. Now, within 6 months, you allotted the securities to the public. It means it's a well planned activity, no? See, normally what happens is the company is saying that I gave the shares to the issue house. Now, what they do with it, I don't know. Then why did the issue house offer the securities to the public within 6 months? If it was their investment, they should have kept it. No, they should have kept it. So why did they offer securities? The logic behind that is that unless and until the issue house does not offer the securities to the public, how will they get money? Let's say that the company has given them shares worth rupees 10 crore. Okay, now the issue house has to pay 10 crore to the company, but no issue house will have 10 crore rupees. They will get that money only when they offer the securities to the public and the public gives them money, which they will then give it to the company. It's a well planned business activity. So the issuer says, all right, we have the holding capacity for 6 months. We will hold it for 6 months. After 6 months, we will go to the public. We added the word or. The entire consideration has not been received by the company. The company, if you have issued shares of 10 crore, you should have received the full 10 crore rupees. Why did you receive only 9.5 crore? It means that the 0.5 crore was taken as their commission. Also, see, sometimes what happens is that the issue house offers securities to the public, then they give money in application, then at the time of allotment. So slowly they will give money. It means that this is a well planned activity. You are just using the issue house as a medium to offer securities to the public. You are avoiding the issue of prospectus. Provisions will apply. See, why the company was avoiding the issue of prospectus? Because prospectus is very time consuming, it is very costly. Sometimes we are not aware of the provisions. So they wanted to avoid it in this manner, but we caught them. We said whatever document the issue house is using, that will be considered as a prospectus. Next, we have shelf prospectus, section 31. Section 31. Now, the word shelf shows that the prospectus has a shelf life. It indicates that the prospectus has a shelf life. Now, see, shelf prospectus is not issued when you offer shares, equity shares. They can be issued only when the company is raising finance by issuing non-convertible debt bonds. Okay, please write this. Can be issued only when the company is raising finance by issue of non-convertible Why? See, in case of equity, there is a lot of risk. So you cannot allow just one prospectus to be applicable for multiple issues. See, what is the meaning of a shelf prospectus? Shelf prospectus means that you issue the prospectus once, and then that will be used for 1 year from the date of the first offer of security. So it has a shelf life of 1 year. In case of equity, the information keeps changing. So there, it is very dynamic. You cannot use just one prospectus. But in case of non-convertible debt bonds, these are debentures, pure debt, you can use one prospectus for multiple issues. So shelf prospectus means a prospectus for class of securities or certain securities like non-convertible, where they are issued over a certain period of time without further issue of prospectus. So you are issuing the shelf prospectus once. The validity will be 1 year. 1 year is not calendar year, financial year. It is 1 year from the date of opening of the first offer of securities. So within 1 year from the date of first offer of securities. Now, this was the first offer. It is valid for 1 year. Now, in that 1 year, I made a second offer of security, third offer of security, fourth offer of security. I'm very sure there must be a change between the first and second and third. Some financial change will definitely be there. No, new charges may be created. There are the financial, the information may change. Charges are created. How will we inform the members? How will we inform the investors about it? Through the information memorandum. Okay, through the information memorandum. So consider the shelf prospectus as your module and consider the information memorandum as the amendment sheet which you get. The module and the amendment sheet both have to be studied for exam. Similarly, if I am investing in the company, I will study the shelf prospectus as well as the information memorandum. So information memorandum will contain information on all the material facts relating to new charges created, changes in the financial position, etc. Both when combined will make the final prospectus of the company. Red herring prospectus. Now, if I tell you, you tell me at what price I should issue the shares. You will say, ma'am, we are not in a position to tell you. I said, no, give me a guess. Then you said, okay, ma'am, you issue shares at 450 rupees. Then I say, isn't it too less? Then you said, okay, ma'am, 850. Isn't it too more? So it is not possible sometimes for the company to determine the exact price at which they want to offer shares to the public. So they come up with a price band. Okay. So they know that people are showing interest of buying securities between 420 to 450. So they give a price band and you will apply in that price band. Now, logically speaking, only when you offer, like your offer is considered as a bid. Only when you offer securities at 450 rupees, you can expect some allotment to you. Yes, only then you will get it. So generally, like in IPO also, now there were so many IPOs in the last few months and there was a price band. Yes, every IPO had a price band. Only when you apply at the highest band, there are chances of you getting it because so many people are applying it. Now, so it's not compulsory. Okay, it is however not compulsory. Maximum applications may be received at 440. That is also possible. So people who have applied at 440 and above will get allotment. Ma'am, I applied at 450. Now you are allotting at 440. I gave you 10 rupees more. You will get a refund. You will get refund. Okay. Refund in the sense amount is now only blocked. It is not deducted. So that amount will be unblocked. Only the 450 rupees will be deducted from your bank account because that was the price at which the shares were allotted. So red herring prospectus is a prospectus in which there is certain information which is not given because we don't know. We don't know the exact issue price. Because we don't know the issue price, we don't know the issue size. So the quantum and the price is not included. It is left blank. That is why it is known as a red herring prospectus. Red because it shows danger. We are trying to divert the attention of the shareholder that listen, there is some information which is not yet provided because we don't know about it. After the allotment, when we know the price, then we will issue the final prospectus. Okay, and again we will file it with the ROC, highlighting the changes, that these are the changes made. The red herring prospectus must be filed at least 3 days prior to the opening of the subscription list and offer. This can be asked as MCQ. What is abridged prospectus? See, you have the module, but have you ever read the complete module? You get the prospectus from the college. Do we even read all that? And just give us a summary. Like, we are not doing revision from the module. We are doing revision from a summary book, chart book. Because I know it is not possible to revise the entire module. So similarly, the company also knows that these members, they don't read the entire prospectus. Why waste money and paper? Yes. So why waste the money and paper? So instead of giving them instead of giving them the full prospectus, we give them only abridged prospectus. This is like a bridge between the full prospectus and summary prospectus. Okay, summary. So this is like a bridge. SEBI will tell you what you need to publish. Otherwise, the companies will publish only that information which they feel is most beneficial to them. We don't want that. So it is a memorandum, means it is a summary containing such salient features of a prospectus as may be specified by SEBI. SEBI will specify what is to be written. Otherwise, the companies will write only that information which is favorable to them. So SEBI will specify. It should provide adequate disclosure. It must be attached for every application form. A copy of the full prospectus must be furnished on request. So there are people who want the full prospectus. We will make it available. These are the circumstances wherein a prospectus, including an abridged prospectus, is not required to be issued because maybe the public is not involved, protection is not required. Let's say we are issuing shares to an underwriter. Now, underwriter already knows about the company, so protection is not required. Securities are not offered to the public, so we are going for, let's say, for example, bonus shares or private placement. Public is not involved. That is why protection is not required. We are offering securities only to the existing members, like in case of rights issue. Yes, rights issue, rights shares. Securities are similar in all the respect to the securities which are offered earlier. We had issued 12% preference shares. Again, we are issuing 12% preference shares only. Securities are issued by a private company, so they go for private placement. If the private placement is involved, public is not involved, protection is not required. Sometimes shelf prospectus is issued. We are already issuing shares which are similar to the shares which are already issued. Shelf, like NCDs. The shelf prospectus is already issued, so that is why fresh prospectus is not required. This is very important for exam. Misstatements will attract penalty. Misstatements in the prospectus. See, prospectus is the only document on the basis of which investors invest their hard-earned money. That is why law says that everything written in the prospectus must be true and accurate. If there is a misstatement, then the directors, officers, and the company will be liable. There may be criminal liability. Before that, misstatement in the prospectus. Misstatement includes 3 points. First, I am including something which is misleading. Instead of giving information about declining dividend, I write average dividend. Nobody will come to know that this is calculated out of a declining trend. I include something which is false. In my prospectus, I write that Mr. Mukesh Ambani is going to become the director of the company. This statement was false. I included a wrong statement. Prospectus is misleading. Omission. I wrote all the dividends. Okay, I wrote all the amounts correctly, but I did not write that the dividend is given out of capital profit instead of revenue profit. This I did not write. So the prospectus is misleading because of the omission. Okay, so there may be either criminal liability. Okay, there may be either criminal liability or civil liability. How will I know? See, criminal liability will be when guilty mind is involved, mens rea. Okay, criminal will be when guilty mind, mens rea. Okay, when guilty mind is involved. Over here, guilty mind is the essential condition. In civil, damages are the essential condition. Okay. Now, every person who has authorized the issue of prospectus will be punishable under section 447. This we discussed yesterday. Unless that person shows that the information was immaterial or I had reasons to believe that they should be either included or excluded. Civil liability will be when damages are imposed on the company, director, proposed director, promoter, expert, or anyone who is authorized to issue the prospectus. They can always say that we believed at the time of giving our consent that the information is true. We withdrew our consent when we came to know about the misstatement, but in spite of that, prospectus was issued. Okay, prospectus was issued without my knowledge. When I came to know about it, I gave a public notice. These points are very important for exam. They are separately asked when is a director not liable. Also asked in the exam when is the expert not liable. Very important for case based. Super important for case based questions. Just one type of question is generally asked. Okay, so if you read my compiler, you will realize that just one type of standard question is asked on underwriting, but it is important. What is important? This. Rule 13. Limits. Okay, very important. Disclosures. Important. Now, underwriter, he agrees to purchase the shares which are not subscribed by the public. The payment of commission must be authorized by the articles. In fact, the underwriter is entitled to commission, which is in case of shares 5% of the issue price or the amount or rate which is mentioned in the articles, whichever is less. This is something on which questions are generally asked in the exam. The articles authorize 4%. How much can the company give? 4%. The articles authorize 14%. You can give only 5%. On this, a question is generally asked. In case of debentures, 2.5% of the issue price or the amount of rate authorized by articles, whichever is. From where can you give commission? You can give the commission out of the proceeds of the issue or profits of the company, past profits, or both. There are certain disclosure requirements. Please note, students, disclosure requirement is very, very important for exam. They specially ask in the questions, write the disclosure requirement. What is to be disclosed in the prospectus? So if you have place, you can write down, or you can write down on the next page. Disclosure in the prospectus. We need the name and address of underwriter. So in the prospectus, you will see, why do we need disclosures? Because you are going to give him underwriting commission from the proceeds of the issue. So you need to inform the public that you are giving me 100 crores, but out of those 100 crores, I am going to utilize 1 crore for giving commission. The number of securities that he has underwritten, number of securities underwritten. What is the amount or the rate, that is the percentage of commission that we are giving him. All this needs to be disclosed in the prospectus so that people know who are the underwriters, how much they have underwritten, and what is the amount or rate of commission. These are now, see, in allotment you may find that there are many points given in your study material. Also, my textbook also has a lot of material, but these are the most important points of allotment on which a variety of questions can be asked. Okay, so I have chosen the most important point. Allotment is generally made by the board of directors. Why did I pick this point? Because who is the authority? Because allotment made by an authority who's not like authorized, that allotment will be void. So allotment will be made by the board of director. They may, however, delegate this authority to any persons. If the allotment is made by an unauthorized person, then the allotment is void. Allotment cannot be made to the minor because minor cannot become a member by allotment. He can become a member only when fully paid up shares are transferred in his name. He cannot apply for the shares because application and allotment makes a contract and minor is not capable of entering into a contract. The application money should be at least 5% of the nominal value. This can be asked as MCQ. No allotment will be made unless the minimum subscription has been received. People should subscribe. People should agree that yes, we will purchase the shares, and the sum payable on application must be received within 30 days from the issue of the prospectus. One, we need assurance from the people that whenever we require money, they will pay it. And we also need the application money, that is like a token money. Now they will not withdraw their application, so that an assurance we need. So that is why application money should be received. If the minimum subscription is not subscribed, the amount must be returned within 15 days from the closure of the issue. Sorry, it must be returned within such time and manner as may be prescribed. So the return should be within 15 days from the closure of the issue. Otherwise, you will have to return it along with the interest at the rate of 15% per annum. Okay. So within 30 days, you should receive the money. If you don't, then return should be within 15 days. If you don't, you will have to return it along with interest at the rate of 15% per annum. Okay. Now, if you don't do that, corporate veil will be lifted. The director's officers will be liable. This is important for case based MCQ. Do you know you have a long MCQ? In that, they may ask you case based MCQ. So, this is important for case based MCQ. Minimum subscription can be received by check or any other instrument, not cash. This is to avoid money laundering. So, only check or any other way, but not cash. Okay. Check. Nowadays, ASBA facility is also available, bank transfer, but not check. The company making the allotment shall file a return of allotment in form PAS3 within 30 days of allotment. This is important for case based question. Important for case based question. Default will attract penalty. You need to learn the penalty in this case because it is separately asked in the exam. Okay, so this was about allotment, and I also gave you an idea about the type of questions asked. Students, I'm ending the session here only. I have another session at 8:30. So private placement is remaining. This I will cover tomorrow. So for tomorrow's lecture, you will revise share capital. Yes, we are also going to start with share capital. For private placement, I have already prepared a handwritten note for you. I will show this to you tomorrow. Tomorrow we will discuss share capital. Yes, everything about the share capital. Debentures I will cover in my next lecture. Okay, not tomorrow. So tomorrow we will cover share capital. and day after tomorrow we will do debenture. So please revise share capital before you attend tomorrow's session. The chart book can be purchased from my website capreetiagarwal.com. The compiler is compulsory because I'm telling you students, maximum questions will be from that book only. So do visit my website capreetiagarwal.com. My number is also mentioned on the website. In case you have any doubts, please feel free to contact me. And it was lovely coaching you guys. I will see you tomorrow with a new chapter. So all the very best and good night.